So you spent 8,760 hours building your business credit, by the way, which is 1 year. And you filled out that business credit application to get a business credit card, or you filled out a business application to get a business loan, and you still got denied. Well, I'm going to tell you the reason why you got denied and what you can do in your business to get approved for that business credit card or that small business loan. But before we do that, my name is London. Welcome to my YouTube channel called London Business as Usual, where I teach new LLCs how to start, how to grow, and how to scale their business by using business credit. If you're new to my channel, make sure you like, make sure you subscribe if you like the content that I'm providing for you today. Thank you. Now, let's hop right into it. Now, for new LLCs out there, this is a very challenging process because most of us are not building business credit properly. And here's why. First, let's break down what is business credit. So business credit is when you leverage your new LLC. Now, what I mean new, anything under 2 years is considered new to these lenders, to these financial institutions. Now, you can be a week, a day, 6 months, anything under 2 years is considered new. But you leverage your brand new LLC or an established LLC, anything over 2 years, but you're going to other companies, you open up lines of credit with those companies. So let's unpack that a little bit more. So based on our business of based on the structure of our business, based on the foundation of our business, based on our business credit profile, and based on our business credit scores, we are going to other companies and we open up lines of credit with those companies. Got it? Now, the question becomes, what are those other companies? Well, let's unpack that. Let's break that down. You probably heard them before. We got the Uline, the Granger, the Quill, the Cerci, CEO Creative, JJ Gold, Home Depot, Office Max, Dell, Best Buy, Crown Office Supplies, Staples, Amazon, any gas store cards like Wex and BP, any retail store cards like Macy's, Nordstrom's. So as you can see, I can go on and on and on and on, naming all of these different type of companies where you can just take your business, EIN only, and go to those companies and say, hey, I need a line of credit with your company. How much, based on the foundation of my business, based on the structure of my business, how much are you willing to lend my company as far as credit? That can be lines of credit all day long, right? So that's all you're doing is going to other companies to open lines of credit. We got it? That's business credit in a nutshell. Now, a few things I want to explain as far as the basics when it comes to business credit. And stay with me because there's a method to my madness. I'm not a madman for no reason. There's a method to my madness, right? I'm going to explain to you exactly why, what is business credit is. Then I'm going to explain to you exactly why you spent all that time building business credit just to have your loan application get turned down. So follow me. Here's the thing, right? So when we go into these other companies, open up lines of credit, a few things that we're doing. Number one, we're adding vendors and supplier trade lines. Now I'm going to explain why that's important. But first, let me break down the structure of your business. Before you even go to these companies, we have to make sure the foundation of your business has to be properly structured. I'm not kidding. About 90% of business owners, new LLCs looking to start and grow their business based off business credit, get this part wrong. Because you have to have a fundable foundation when it comes to these lenders and these creditors, which means the structure of your business has to be properly structured. So for example, you have to have an LLC. You want to create a separate entity for your business and an EIN. But most people do that. But here's what most people get it wrong at. The first thing they do is create an LLC and then get an EIN. You skip like 6 or 7 steps before you created your LLC. So now you have to go back and correct that information, which is going to cost you more resources, more time, and more money, and more effort, right? And more energy, which then you get discouraged. So I want to teach you how to properly build the structure of your business so you won't have to go back and do it over again, right? Because you're supposed to be focused on how you can get the money from these banks and not focus on, okay, did I properly structure my business? And I got to go back and do it again. You get what I'm saying? So You want to do this before you create your LLC and before you get your EIN. Number one, you want to make sure you choose the proper business name. What do I mean by that? Well, most of you guys want to go into real estate, construction, trucking, but you got construction, trucking, and real estate in your name, not realizing that these are high risk industries. You don't want to have real estate and trucking or transportation or anything of that nature in your business name. I'm not saying you can't go into those industries, but be mindful of your business name. Why? Because the moment lenders look at your business name, immediately you're going to go into two categories. If you have a high risk business name, number one, if you have a high risk business name, you're going to go in a category with a high risk business, right? Which is very bad, meaning you're going to be very limited. Your terms is not going to be good. Your down payment is not going to be good. So we want to stay away from high risk business names. Number two, or we'll get blackballed, meaning lenders, creditors, they won't do business with us at all, just based on our business name. So the first thing, make sure you have a good business name. Now, let me give you some examples of what's a good business name. Number one, we can make sure that it's generic, very generic and vague. For example, London Consulting Business, very generic. Jerry Enterprise, Jerry LLC, very generic. You see where I'm going? Or we can have Bob Logistics, very generic. Or SPP Management, something of that statute where we want to be very vague and very, very generic. So just keep the lenders on their toes so they don't really know what we're doing. It's really important. Now, that's my recommendation on a business name. Now, when it comes to your business industry, which means you can go into real estate, but it's something that's going to be attached to real estate as far as your NAS code. This tells lenders and creditors which industry you're in. So it's all type of codes out there, right? I'm not going to go over all the codes, but there's codes out there that it's like 200-300 codes for real estate, 200-300 codes for construction. So 200-300 codes for management, for consulting, for enterprise. So you want to pick the right code that'll benefit you and that'll suit you and your company. And we'll talk a little bit more about that on a separate video. Now, so you want to make sure you get the right code, the right business name, which is called your NAICS, NAICS. You can go to NAICS.com, NACIS, to get that code. Now, after we do that, then we want to make sure we look good on paper. What do I mean by that? Well, if you're not in the brick and mortar, you want to look good on paper, because remember, credit is all about perception. Do you look good on paper? You tracking me? Do you look good on paper? I don't care if you're doing business inside your mother home, inside your home office, and your basement, and your car, and your doghouse. I'm kidding, but I'm not. Because by the time you go to these lenders on your business credit application, you want to make sure that you somewhere in the most prestigious neighborhood in your city, in your town, in a skyscraper building. As far as your address, where you're conducting business at. And it's very important because lenders want to view your business as being an established business owner. And one of the ways you can do that by your workplace, where you work at. You want to get a physical office, not an address as far as a PO box. You are going to immediately get flagged if you have a PO box. Now, one of the sites I recommend is opus.com. Why? I'll be very brief with this. They give you, not only you get a virtual office, but also you get a business trade line. So every month you pay, I think it's like $99 a month. Every month you pay for that virtual office, they're going to report it to a business credit bureau called Credit Safe. So you will get that business trade line. So you're killing two birds with one stone, which is great, right? Now, after you get your virtual office, what you want to do next is you want to make sure you have a professional email address. Go to GoDaddy.com or Google Suites, get a professional email address, .com, .org, or .net. Next, you want to make sure you get a professional phone number, Ring Central, 1-800 number, and you can also get a local number. You can get both numbers. Next, you want to make sure that you be on an internet. You want to have an internet presence. Google, what else out there? You want to make sure you get on any social media sites like Facebook, Instagram, YouTube. More importantly, get a professional website. Now, you don't have to pay $1,000, $2,000, $5,000. You can go to Fiverr, hire somebody on Fiverr to build you out a website for $50, something like that. You know, it can be a sales page. You just want to have some type of internet presence. Then you want to make sure that you're in the public records. What do I mean by that? Well, 411 listing. Get in the 411 listing. I don't know why lenders still check it. They really do, right? Lenders and creditors still check 411 listing. So now you building a fundable foundation. Now, after you do all that, then you can go get your LLC, get your EIN, get your business checking account. Now, a business checking account is one of the most important things you can do. I get this all the time with people, right? I'll tell them, hey, I ask them, how long have you been in business? They tell me 5 years. Okay, cool. How long have you established your business on paper? Meaning, when did you file with the Secretary of State? 1 year. Okay, how long you had your business checking account? 90 days. What? Are you serious? So technically, you're not in business. You only been in business for 90 days. To these lenders, to the eyes of the lenders, you only been in business for 90 days. Why? Because they're not taking you seriously. You're not proving that you are an established business. Why? Because they can't check your payment data, which they are going to assume that you're not making any revenue in your business because you never had a business checking account. Are you tracking me? So we want to make sure we have a business checking account, right? Now, after you have all that, you build a fundable foundation. Now you can start going to other companies and open up lines of credit with these companies. Now, if we break that down, what does that look like if we unpack it? Well, here's the reason why you get turned down. Because you only building business credit with vendors and suppliers. So which means you're getting all net 30 accounts. You're going to the Granger, to the Quill, to the Uline, all the other companies that I mentioned before. Well, what's problematic about that is you're primarily building up your 80 paydebt score. And here's where it gets very interesting. If you haven't heard this before, you're going to hear it from me. And it's not the most popular thing to say because I'm not telling you what you want to hear. I'm telling you what you need to hear as a small business owner to get funding for your business. That's my goal for you. Right? So here's the thing. When you only building business credit off vendors and supplier trade lines, you're primarily building up your 80 paydebt score. Newsflash, breaking news. Lenders, creditors, any financial institution out there, whether they are national bank, regional bank, community bank, credit unions, fintech companies, they don't care about your 80 paydebt score. They don't. No lenders in the world are going to approve you lending from your 80 paydebt score. You can ask them. Trust me, I have. No lenders is going to do that. So what we have to do, we have to make sure that not only we building vendors and supplier trade lines, but also we building financial trade lines. This is the primary reason why your loan application get turned down, because you don't have any financial trade lines on your credit report. So which means if you don't have any financial trade lines, how can lenders and creditors determine if you can manage debt? The only way they can determine if you can manage debt if you can manage money. Vendor and supplier trade lines are not money. It is what it is. The supplier trade lines and vendor trade line, where it's primarily just goods and services. You want to deal with money. So what are financial trade lines? Well, secure business credit cards, which I made a video about. Unsecured business credit cards, business lines of credit. What else we got? Business auto loans, installment loans, lease loans, invoicing, financing, right? So these are all examples of financial trade lines where lenders and creditors care about. So when they look at your business credit profile and they see nothing but vendors accounts, they're like, But if they look at your business credit profile and they see vendor and supplier trade lines, a few of them, 3 or 5 of them, and they see a lot of financial trade lines, 3 to 6 of them, then more likely you're going to get approved. Now, here's the thing. That alone will not get you approved. Now, what you need to do is transition to business funding. See, there's a difference between business credit and business funding. I made a previous video about that, business credit and business funding, right? And I'll put it in a link in the description below so you can check it out. Business funding, I told you what business credit is. Business funding is when you leverage your brand new business or an established business, but you also go to leverage the business owner credit, which is your personal credit. Put the two together, and now you can go get the bank's money. What do I mean about the bank's money? I mean the American Express card you want, the Wells Fargo card you want. I mean the Chase Unlimited Inc. card you want, PNC Bank, Choose It Bank, Citizen Bank, Citibank, right? KeyBank, all these banks that you've been hearing about on the internet, they're only doing it because they leveraging their personal credit. That's business funding. So now you're going to get cash value business credit cards. Now you're going to get cash value business credit cards. 95% of business funding is predicated off your personal credit. I want to make that very clear. So for those of you, you can build a strong business credit profile, but you need to attach that to your personal credit to with the bank's money. This is one of the reasons why you get denied. Now, I explained to you in my other video, if you want to watch it, I'll leave that in the description, how to properly build your business credit profile to transition that to business funding without even using your personal credit. Right? Which is really cool, which is really great. So if you don't have good personal credit, in the meantime, fix your personal credit. 3 months is going to go past, 6 months is going to go past, 9 months, 12 months, 18 months. I don't care how long it takes. Fix your personal credit. You tracking me? The time is going to go past anyway, whether you do or you don't. So spend time doing it. In the meantime, you're going to build a solid business credit profile where you can use that business credit profile to go get the bank's money so you can transition from business credit to personal credit. There's a way. Where there's a will, there's a way, right? You tracking me? So I'll explain that. I'm going to drop that also in my description so you can go ahead and check that out. But yeah, that's the primary reason why you guys are getting turned down, because you're spending most of the time building business credit based off vendors, accounts like Net30s, the Dells, everything that I explained, which is okay. It can help your business, but you want to get financial trade lines so you can transition to business funding. I hope we got it. Hope that made sense. Make sure you like, make sure you subscribe if you like this content I provide for you. I will see you on the other side.